I
Yeah,
hear
we
you,
got
Ben.
it.
How are you, buddy?
Doing great. How are you?
Very nice to meet you. I appreciate you taking time to be with us today. I noticed your work on Twitter and said, boy, I'd like to talk to Ben and some unusual things. People would call it unconventional, some of the work that you do. We have a mutual friend in Victor Zuberoff, who also is very esoteric. And I'm curious, how long have you been doing this, Ben? And what was it like at the beginning? How did you get started, and why did you gravitate towards cycle work?
Sure. I'll go all the way back to the beginning. It all started when I was a kid. I was obsessed with sports and still am.
Yeah.
I think sports is fascinating. The whole competitive atmosphere and these guys performing under pressure and the ladies performing under pressure. It just fascinates me. So
Right.
I started with that, and I became fascinated with predicting the outcomes of games. And in a way, it set me off on the wrong path, because that's all about ego, and that's all about being right. Being able to tell your buddies, "Oh, I knew that was going to happen." And
Right.
study the stats and how the players did, and all these different things. And that started me off. And I said, "Oh, I can bet on this." So in middle school, I ended up losing all my savings and birthday money by betting on football through my uncle's bookie. And so that was my first form of tuition, if you will, in paying the price for trying to figure out an unpredictable event.
I hope the kids at school shared their lunches with you, Ben. What a young age to get humbled in, forecasting. Very young age. So what happened? What happened after that?
From there, I learned that somebody was winning, and it was the bookies, because they had that edge, right? They had the juice that you had to pay. You go
Right.
1-1, and you still owe them money. So they had an edge. So I just kept thinking to myself, how can I get an edge? I need an edge if I'm going to win, because it's clear the only way to win is if you have an edge.
Right.
So I read an article about these two brothers in Las Vegas that owned a big casino, and they started out with a single slot machine. And slot machines had a really nice edge, so they started from there. So I sent a letter off to a slot machine manufacturer and asking them if I could buy one of their machines, if they would sell me a machine. The idea was like, well, I'm going to put it in my basement. I'm going to have my friends come over and bring their quarters, and when they came over to play, and I'd make some money. Well, I got a nice letter back from the manufacturer saying they couldn't sell any machines if I wasn't in Las Vegas or Atlantic City, because it's the only places where gambling was legal. So again, I was thwarted, and I said, okay, back to the drawing board. Got to think about this. Well, fast forward to college, where I started taking statistics courses, and here my eyes got open to the concepts of expected value, standard deviation, probability distribution, et cetera, et cetera, et cetera. And so through the community and the curriculum that I took at Wharton, I started this lifelong fascination with the financial market. They'd bring speakers in, and they would tell how they invested in this company, or they bought this stock, or they traded this, and they did that, and they made these fortunes. So it really excited me and started me on this path. And after college, I worked as a broker, and then I began trading my own capital in 2000, in addition to doing some venture capital investing and real estate development. And at that time, I was trading with an edge that was non-existent. I was trading based on the fact that I had gotten lucky in the big bull market of the 90s, and
Right.
totally confused brains with a bull market.
Okay.
I lived and died by the motto that diversification was wealth preservation and concentration is wealth creation. That was my big thing. So if I believed in something, then I was going to go in big, right? Go in big, make a lot of money, and then get out. Well, being young, cocky, aggressive, and clueless works really well in a bull market. It can work out for you, but it's a recipe for disaster in a bear market. And I ran my trading account up to into 8 figures in the early 2000s. But by the bottom in 2009, I had completely blown out my trading account, and it was starting over time. So the death of my
Where
trading
where did you find the will and desire to start over, and did you take some time to reflect, contemplate before you step back up to the plate?
It's a good question, because the death of my trading account put me on a path of trying to understand that it's not about being perfect or predicting the market perfectly to be successful. It's not about being right. It's about getting it right. So I had to do this sort of journey of introspection and say, okay, what's going on here? Why am I doing this? How is it serving me to try and do this and to blow up an account? Why did I do this? What was the lesson there? So I did take some time, and I went through a process of introspection and with mentors and education and refusing to quit. I was able to build it back up and really get on the right path and find out, how to engage with the markets in a way that is not harmful to me or my family. And a couple months ago, I think you had a guy on who was talking about, he'd blown out several accounts, and
Peter.
yeah, he had life insurance, and he thought about suicide and how he could fake his death. So I'm telling you, I had those same thoughts when he was talking. I was like, wow, I get that. I understand the depth.
Yeah.
And it's a part of the journey. It's how we all get there in different ways, but if you're going to be successful, you have to get to a point where you're broken down enough to where you realize you have to change, you have to do things different. Unfortunately,
in every area of our life, usually.
And I think that's
not just trading. So, God, what a great story. So, you went through this period. It's almost like a grieving process, right? It's a loss of money. Yeah, so it's not a person, but it's something that you worked hard to do. So was that when you started looking for an edge, and cycles became some type of epiphany for you after that?
I mean, yes, because throughout all of this sort of boom bust experience that I had financially, my fascination with sports was constant. It was still there. And in watching sports, I would notice how at certain times, these elite athletes who could regularly perform at the highest level and do incredible things, sometimes they're just god awful. And when I saw that, I said, how is that possible? Something is affecting them. There's a cycle. There's some sort of force is affecting them that is creating these variations in performance. And I use Tom Brady, for example. He's arguably the greatest quarterback of all time. And there are some games and some Sundays where he couldn't throw a ball in the ocean off a pier. And you're like, what happened? How is this happening, God?
Yeah.
And this is what led me to cycles and sort of this lifelong journey of discovery that's ongoing. Cycles
very hard to stay in a peak performing state, which you really almost need to be in as a trader, and no one can do that all the time. So did you kind of get in touch after, using the metaphor or example of Brady, that us as individual traders also have our cycles? And have you learned that when you're, say, for example, you have the flu, or there's some type of crisis happening in the family, that it's okay to lay off the market because you're going to be like Brady on his off days?
Absolutely. And I think, Dale, you hit on the key thing. It's understanding yourself and understanding your own cycles. And for me personally, I'm highly susceptible to FOMO, the fear of missing out. And so I know that. I know that's a weakness of mine, and that's something that I have to combat all the time. And so in 10, 20 years ago, when exactly something happened, there's a problem in the family, I didn't feel well, I didn't sleep well, I was sick, under the weather, whatever was affecting me, or I was at the bottom of one of my own cycles.
You still forced it.
Right, I have to work, I have to trade, I'm going to miss something, you got to be there, you got to be the breadwinner. And 99 times out of 100, I would regret it because the performance would be horrible. And so you learn to listen to those, listen to yourself, listen to the cycles, and take the time when you're not at your peak.
Okay, so cycles probably, I'm just guessing here, Ben, helped you with that FOMO, because cycles are about time and time windows, and it forces you not to take any action until you enter one of those time windows. Is that correct? It helped you avoid FOMO and taught you don't always have to be in the market because, cycles, depending upon duration, don't happen every day unless you're really looking at short-term stuff. So was that really the edge that you were looking for in grade school and college, that cycles are giving it to you now because you've had to be patient, not learn to be patient, but to follow your own work? There's times that all you're doing is watching the market instead of trading the market.
That's right. And the cycles are a big part of the edge, and it was the basis of sort of this journey that I started on. It sort of has led me to today where, along with my trading and business partner, we've created sort of a systematic way of engaging with the markets. And we call it the holy trinity of trading. I have 12 years of Catholic school, so I can't get away from it. But this is the holy trinity of trading, as we call it. You got the Father, Son, and the Holy Spirit. The Father is find trending markets. You got to find markets that are moving. If a market's not moving, you stay out. And how do we do that? You do that through structure, where you've got either consolidation phases or impulses. You want to be in the markets when it's impulsing, and you want to be out of the markets when it's consolidating. We use Gann squares and ellipses to find beginnings and ends of things. When does a run end? When does a leg end?
Do you have a wheel? Do you have a Gann wheel?
I don't use the wheel. I use more of the squares.
Okay.
But there's a lot of people who do use them. Can you all see my screen? Can you see the screen?
Yeah, we got it. We got it up there with all the cycles and everything. So maybe you could talk about 1, 2, 3, 4, 5. Is that an Elliott wave pattern that you also integrate?
No, it's not. Okay. This is not Elliott wave. What this is an example of sort of the structures and the ways in which we approach the market. Using trend lines. I see, on all your presenters' charts, lots of trend lines. Trend lines are a simple tool, but they are incredibly important and incredibly effective. So this chart shows these dynamic pivots that I usually post on Twitter that people have found very helpful. They're really good at helping to define sort of the bull-bear line in a trade. And these examples are not hand-picked. I just took the last 3 days. So these charts that we'll run through are going to screenshots of the last 3 days that I'll show you. So here we're looking at Monday. These are the lines. You can see how the trend lines, once we break out, we come back and retest the trend line. Here we came down, tested a pivot, tested a trend line, moved up to the next area of resistance. It resonated around that, came back, and created a trend line off of that. And so it's simple stuff, but it's super effective. Here's the use of ellipses for things we talked about with targeting. If people aren't familiar with how ellipses work, essentially the borders and this major line here are areas of support and resistance depending upon how price comes into them. And these are all 4-minute charts, by the way, so it's very short-term stuff here. You can see the different spots where we get support or resistance. And this is using
never used them before, but they look interesting. I think they're also available for people on MT4 and TradingView. It's a pretty common tool that I've never really investigated.
Here's another view of ellipses with a Gann square, showing the 90. This is a 90 up, 90 in time, 90 in price. When you get to areas like this where you got a 90 and you got an ellipse, that's a pretty significant place to take profit.
So you also look for confluence of, the ellipse and again, Times Square and pivot. The more reasons, it's almost like being a lawyer, isn't it, Ben? I mean, you build a case for a trade. If you only have one piece of evidence, it's not as good as if you could do what Robert Mueller's doing.
No, that's right. You build, because it's not about making a 100% sure call. There is no such thing in the markets, and the turning point for me is when I gave up that belief and that desire to have 100% certainty. It's about probability, and the more evidence you can line up, the higher your confidence and the higher the probability that you're going to have success.
I'm also guessing on your journey with some of the experiences that you had that you had to find some type of risk management discipline for when, like you said, not everything works all the time, so that you would get out of the way, which is a hard thing for people to do. Some people say, well, I'm using a mental stop, and then it gets to that price level and they say, well, you know what, I think I'll let it work another day, or, it gets near a stop loss order and it ends up being a CIC, cancel if close. Why don't you talk to us about your discipline for when you're wrong and how you manage those situations?
Okay, so the second member of the Trinity is the Sun, which we have. The first is finding trending markets. That's the father. The Son is minimize risk at entry.
Okay.
Anytime you put your capital in the market, you have to know a predetermined risk amount that you're gonna say, okay, this isn't working, I got to get out.
Bingo.
And how do we?
So you know before you pull the trigger what the contingency is that's getting you in the market, and if that's negated, you're gone.
Absolutely. And the dynamic pivots that I post are one of the ways in which we minimize risk, because we know these are energetic points in the market where if the market gets through them and stays on the other side of them, you're wrong. You got to get out. You got to move away. So those are ways that we minimize risk at entry. Trend lines showing support and resistance. Fantastic way to minimize risk at entry. Number one, it can define risk for you, because you know when it breaks that, you're not in the right position. You're on the wrong side of the market. But it also helps you understand support and resistance in areas where you can potentially buy or sell. So that minimizing risk at entry is a big part of the process.
So you're okay. So would you say that your cycle work is based upon Gann, or is there something that you've tweaked in your cycle work, like on the first chart that you had, all those ellipses on there, or something like that? Where did you learn cycles? Was it from a mentor, or was it from a book, or was it Dewey? I mean, there's so many different types of cycles to follow. What's your cup of tea?
I think Gann is the starting point for sure.
Okay.
It opens your eyes to where cycles are, how they work, where to look. So I would recommend anybody that's interested in cycles start by reading a lot of Gann. Find a mentor. Okay. Find somebody who can push you off into a direction and get you going and looking and researching. And it takes time.
Did you have one?
Yes. Yeah. My business partner is a partner and a mentor, and he's helped guide me into, pushed me into certain directions that I've found things that, have amazed us both. And the stuff that he's done is fantastic and amazing as well too. So.
So an angel found you, which goes along with your, spiritual background. So you have your mentor is somebody who also believed enough in you to take you under his wing, and you're part of you guys work together now. That's really a blessing, Because you know what
Absolutely.
people go through, Ben, on the internet, looking for good people, and you know, everyone has a secret to trading when, you know, there is no secret except hard work and perseverance, right?
Absolutely. Absolutely. I
Okay.
could not agree with you more. And now let's talk about the last part of the Trinity, which is managing the trade and taking profit.
Okay.
Here again, this is incredibly important. Greed, just like FOMO and fear of losing money will hurt you, greed will kill your account. It will absolutely kill your account, because then you get in this cycle of, well, I didn't sell it where I wanted to sell it, and now it's below, so I got to wait, and then it goes below, and then a profit turns to a break even, and a break even turns to a loss, and that I've been through that cycle.
How
It's
about this cycle? You know, greed is one. How about for people that maybe had went through a long period of being unsuccessful traders, and their entries are excellent, but they have what I call first daylight syndrome, where they don't ride the trades to their potential because they're really not used to being right, or they've been, you know, psychologically wounded, and when they see it, they take it. And they may be doing okay, but they could be doing a lot better. How do you how would you mentor if it was me, which it is? How would you mentor me?
So here's the way that we do it, and I think it would work for you, because it sounds like, Dale, you have a lot of the same proclivities that I do for a little bit of self-destruction. You take trend lines, use trend lines to define these impulsive legs, right? You break a
Yeah.
trend line, it's over. So you take the money and move on. Cover
Okay.
risk. The concept of covering risk frees you mentally so much. It's incredible. And what does that mean? If you've got a position and you're risking 5 points on that position, when your whole position goes up 5 points, take half off.
Okay,
You're
that's
now
what
break
I've
even.
done. All right, that's what I've done to ameliorate it. So, you're a believer in partial profits too, because then you're in a no risk position. You have probably tighten up your stops to near break even, or maybe use a market stop that is going to be tighter than when you initiated the position. But partial profits is something that's part of your program.
Absolutely. And I think targeting also helps, because remember, the market is so big and so undefinable, right? It can do anything at any time. Our goal is to narrow those possibilities down by using all the techniques we can to define it in a way in which we will engage with it if it meets this criteria. So targeting helps with that greed or that fear of missing out on more profits, or selling too quickly because you're afraid it's going to go down. Use the ellipses, use the Gann squares, use these other tools, support and resistance, to help you target. So you say, hey, when it gets to here, I'm going to let some more go.
Okay.
And you're never going. One of the biggest things for me was this desire for perfection. You're not going to be perfect in the market.
Yeah.
You're not.
I'd say don't expect
And
perfection at the craps table, but you know,
no, you
I
got
would.
to let it go.
Yeah, let me ask you this. On your Twitter feed, I saw you talking about a super pivot, or
Mm-hmm.
a level that's super. What makes it super?
Well, number one, what makes it super is the way it performs. They are absolutely fantastic spots, and this is a live chart that I have on here on the 4 minute. Um, our super pivot level this morning is 2605.75. I've watched
Okay.
these things for years now, and what happens is they will define. There's energy associated with these spots. They are price and time cycle based levels that we have developed, and they're dynamic. They're changing all the time. The whole thing about using them is, as a price crosses it and then comes back to retest it and fails or holds, it tells you where we're going to go. So
Okay.
right
So
now
you wait for retests and either confirmation or false breakouts or breakdowns.
That's right. So right now, look, you can see on this 4 minutes, the setup here is we're crossing down below this pivot. As we
Yeah.
come down, if we can pull back up into it and reverse, you want to be short on that.
Okay. Okay, so we got to your super pivots. I think it was 2620 area that I saw on Twitter. Do you have any? I see you're showing a lot of short time frames. Are you mainly a day trader, or do you have some macro perspectives on what's happening here and what we could look for in 2019, since we're just
Yeah,
beginning the year?
here's some of the. This is obviously 4 minutes is very short term and day trader oriented. This here
Right.
on the right is a weekly.
Okay.
What I was showing here, and have posted this several times, is using the ellipse. We found the bottom of the plunge here. See where
Okay.
we found support?
Yeah.
We found support here on a retest back here. We found support here yesterday, and we found resistance here yesterday. So you can see these ellipses work on a 4 minute time frame or on a weekly time frame, and they can help you define areas where the market's going to have to make a decision. Now, when it goes into that, I don't know what decision it's going to make, but I do know that, like here, when we reversed off of this, that was a good low risk buy.
Okay.
Because you had the support that held and then a reversal.
So what are the purple dotted lines that kind of look like multiple pitchfork or something like that, channels? What's is it possible for us, if we get through resistance here at one of your important pivots, that we could head up towards one of those purple lines above where you have the red arrow pointing down?
Yeah, so this yesterday was a big area of resistance, geometric weekly resistance right here on this crosshair. And we failed. If we make it through that and get on top, the next stop is going to be up in here, which is 2657 to like 2665 in that area. We get through there, then we're going up to here. Then we're going to 2780, 2750. So there's a lot of resistance in here. Talking about the macro view and the cycles, because that is my first love, is the cycles that we're looking for right now. Like the number one probability is that we're going to look at some sort of high in March. The retest high will be late March, early April. There's a major cycle cluster in that area, where if we keep holding these, the way that we watch this to give us a good idea is, can the markets continue to stay above the weekly super pivots? Are they staying above these super pivots? Are they showing strength in relation to these numbers that are dynamically coming in each week? If they are, it means that the models that are pointing up and the cycles that are pointing up have a better probability of coming through. And right now, everybody and their dog. My dog walked into my office the other day, looked at the chart and said, why aren't you shorting the ES here in the 2600 area? Everybody can see that.
That's what bothers me. Isn't that what bothers you? Yeah.
It bothers me. I posted stuff on Twitter about it, because if we can see it and everybody can see it, then the people who can move this market can see it too. And they're not going to.
You know what Peter said that was profound? I still remember it from the interview. He said the market's purpose is to convince you it's something that it's not.
Absolutely.
Isn't that great? Yeah.
I had
All right.
Go ahead. One of my mentors told me something that I always think about too. He said, the market tries to hurt as many people as possible at a given time. So whichever way people are leaning, you got to figure they're going to push it just far enough to get them to stop out or do what they're doing, and then go.
Mean Mr. Market. It's really a mean guy, isn't he?
You know what? Trading is a hard way to make an easy living.
Oh my God. That's one of the first things I heard when I became a Series 3 broker in 77. Someone came over to me and said, kid, this is a tough way to make an easy buck. So they were right. So Peter, any view on anything outside the S&P? You know, there are some cycles coming in gold during the same time frame that you're talking about in March, April for the S&Ps, and I'm thinking
How do
it's
I,
going to be a low in
tell me how
GDX.
to switch my screen, and I'll show you a couple other. I'll show you crude and gold and things like that. How do I change the screen?
Oh, you would shut it down, and then you could just change pages, or you could just close the
I
screen
got it. I
share
got it.
and then
Monitor
go
two.
to another screen. Yeah.
Are you seeing
Okay.
crude now?
Yeah. Yeah, we got
Okay,
crude
so
up here.
all right, so here's crude. So crude, the dotted line and the solid line here are two of the super pivots. You can see we've been dancing
Yeah.
around this one here and stuff below it. The bigger picture here, if we look at the weekly, look at all this resistance we got right up here at 54.30, 54.50.
Yeah.
You got the ellipse and the lines here off of the geometry. So there's strong resistance just ahead here. Doesn't mean we can't get through it, but it's a hell of a lot of resistance right there.
Okay.
That's
Let's look.
How about gold? Let's see gold. Hold on. All right, there's gold. Gold, on the other hand, has a nice amount of room to run up still. 1325 to 1340, 1350 before we see any meaningful resistance.
Interesting.
Here we're hugging right along the super pivot too. See how these things attract price and then they'll reject price either way when it makes
Yeah.
its move.
Yeah. Interesting.
The other one that everyone's talking about, which I want nothing to do with, but I'll put it up, pound USD.
Oh, okay. Yeah.
Here's the super pivot.
It's above
We're above that, which
Yeah.
is bullish. And look where we are here. We're above this crosshair and we're above the geometry. We could go 30.50.
31.
And
Yeah.
if it really wanted to go 34, 34.50, if it really got going.
Great presentation.
Yeah.
Yeah. What a great presentation. I'm really glad that you agreed to come on and be with us, Ben. Nice to talk to you about trading philosophies. I appreciate you sharing your journey, you know, so that people know that, you know, once in a while, when you get knocked down to the canvas, you have to have the will and desire to get back up again. And I'm, you know, wishing you and your partner a great 2019, and really appreciate getting to meet you. And the best way for people to follow you, Ben, is on your Twitter account. Is that the best way? They want to keep in touch with what your work is saying?
Yeah, what I put up here is this is something we're going to be launching in the near future, my partner and I.
Yeah.
Check it out. Come in, see it, look at it. It's going to be our work and the stuff that we do. We want to provide people with, you know, information that's actionable and stuff they can use. So,
well, I appreciate it, and like it or not, Ben, you're my trading warrior brother now.
I like it. I like it.
All right. So really, I think if we ever had a conversation, you and I have a lot more in common than just trading. So really pleasure. I want to thank you so much. You gave us some pearls about some time frames and a look into cycles, and you give people hope that are struggling, that if they persevere and go through some introspection, that sometimes it isn't 3 strikes you're out, that you could come back to the plate and swing the bat again. So great interview, Ben. Thank you so much.
Thanks, Dale. Appreciate you having me on, and I'd be glad to come back anytime.
All right, buddy. Good hunting, and that's it for us here on Thursday. See everyone for TGIF. Remember, when you write the market, don't just count your pips, count your blessings. See everyone tomorrow. Good hunting the rest of the day. You're very welcome, Rick. Ben, Rick Reedy, really enjoyed the interview, and it's my mission and our mission to build up and edify traders every day. Let me just say, mission accomplished today. So adios. See you guys later on. Thanks again, Ben.
Take care, Dale. Bye-bye.